continue advising the public of not being engaged into the virtual assets business, because we see risks if these businesses are being carried out in an environment which is not regulated. There are risks. Even if we know that they are legitimate virtual asset service providers, but you can't distinguish them with the Ponzi and pyramid schemes or scammers if you don't have the legal framework. I know there is another side positive of it, but it also has, it's like a coin. One side is positive, another side is negative. We have been warning people since then that virtual asset business is people to wait until you have the legal framework. Especially we are warning the citizen that be careful, this business risky, so wait, we are not sitting here, we are doing something to come up with the legal framework.
Thank you so much again for giving us your time. It's quite a moment that everyone wants to understand the topic we are going to be talking about. But before we go deep into it, I would like to start with the introduction. Like I mentioned, my name is Vincent Sujera. I'm a reporter with the New Times. And if you could go ahead.
Yeah, thank you. My name is Jérôme Ndayambaje. I'm the Digital Innovation Analyst at the Capital Markets Authority.
Now, the new law governing digital asset, virtual assets has been released, and we are yet to see more regulations and details about how it's going to, a lot are going to be implemented and everything. But before we get there, I'd like to ask, why did Rwanda decide that now was the right time to introduce a new law for the virtual assets?
Yeah, thank you. But I think maybe before I go into straight to the questions, it's very important to first of all say what capital markets is, and maybe so the Capital Markets Authority. The way I want to say that, let's start by the capital markets. I know people have questions about virtual assets, but many more other people also have questions about capital markets. So it's very important also our viewers to understand capital markets. The Capital Markets Authority is a regulatory body in the financial sector. We regulate the capital markets in general with the key mandates of facilitating the development of the capital markets, but also putting much more emphasis on the investor protection. So that the core mandate, maybe, and many more other activities under our mandates. Now, specifically to your question, you said why maybe Rwanda would say this is the right time to regulate virtual assets. So regulating virtual assets, it didn't come just overnight and say, so in the morning we are coming up with the law. I think whether in Rwanda, globally, the virtual assets has been there for quite some time. So I think now we have to more than 10 years since the economic crisis, where people started looking how now we can use the other alternatives without using intermediaries like banks and whatever because of the financial crisis. So I think by then it was like 2008, and then the first virtual assets we know is the Bitcoin. I think it was 2009. So from then, people started thinking worldwide what these virtual assets is, why. So eventually it came here in Rwanda. We also started thinking how do we go about the virtual assets until some of the international standards now started advising the countries how to treat the virtual assets. And one of the key standard setting body, which is specifically for money laundering, they recommended all the jurisdiction to decide whether you regulate virtual assets or you declare yourself that you have banned the virtual assets. And I know specifically in Rwanda, we even did risk assessment to see the challenges and opportunities. So, but the risk assessment report recommended that Rwanda can go for regulating virtual assets. So now you see it was a process. I think the report on the risk assessment was released like in the last 2 years or 1.5 years, because I believe it is in the end of 2024. So the risk assessment recommended to have a proper legal framework for virtual assets in Rwanda. And that's how now we started looking on how to start coming up with this law. So maybe specifically, why did we come with this law at such a time? One, it is because of the international standard recommending to really countries to have the legal framework for virtual assets. Two, we're experiencing a lot of scams in Rwanda. Where scammers here, people are coming with coins, fake investments. So you see now people started losing their funds. And also, if even through this risk assessment, we found that even consumers and investors are suffering. If you don't put the legal framework for protecting investors, for even taking care on the stability of our financial systems, because these virtual assets have implication on our existing financial sector. So all those factors, those informed the country to come up with a legal framework. But the main reason of this legal framework was really to mitigate the risks associated with the virtual assets, specifically for money laundering. And even the standard I'm telling you, one of them that is recommended countries to come up with a legal framework, or the standard for money laundering. Yeah, briefly, I think that's what I could say why we came up with that.
When you explain it like that, you did the risk analysis, and then you figured it was better to have a legal framework rather than banning the use of virtual assets.
Yes.
So does that mean that we had some operators offering the same service but unregulated?
Yeah, exactly. The legal assessment, I mean, the risk assessment that we carried out, we found that in Rwanda, we had some virtual asset service providers. For them, some were so much kind to come and to ask us, so how do we go about the virtual assets? We are willing to offer the services. And to us, we said we are looking on how we can facilitate you to do that businesses, but we continued advising the public of not being engaged into the virtual assets business, because we see risks if these businesses are being carried out in an environment which is not regulated. There are risks. Even if we know that they are legitimate virtual asset service providers, but you can't distinguish them with the Ponzi and pyramid schemes or scammers if you don't have the legal framework. So that's how you see coins are coming. Somebody says, now there's a new coin today. It's very interesting. Please come and join and do ABCD. So that's why it's really very important to come up with a legal framework, so that at least we know who are the legitimate virtual asset service providers, and now we clean those scammers, they get out of our environment, and we remain with the legitimate virtual asset service providers.
We'll go deep into how the filtering is going to look like, but then before we get in there, you analyzed the risks that were there, but then there were also other opportunities presented by the provision of those services. What are the key opportunities identified in this particular sector?
Yes, I think it's an important question. Yeah, if by the virtue of having the risk assessment, if we found only risks, we could completely ban this business in Rwanda.
Yeah.
But the fact that we said, now let's manage this. So the fact is, there are risks, but also there are opportunities. Now, the legal framework comes to provide a balance. How can we minimize the risks or mitigate the risks, and now maximize the opportunities or the benefits that the virtual assets come with? Now, let me even start by the risks that we see in the virtual asset ecosystem. First of all, virtual assets by nature, they have their anonymity. I know people say the blockchain is transparent, others say the anonymity.
Safe.
So now, let me maybe make it very clear. Why do they say that transaction in the virtual asset is transparent? It is because the address that you see in the blockchain, you can know the address, but this address are in two form of alphanumerical strings. You cannot know who is the owner of this
It's
address.
encrypted.
Yeah, it's encrypted. But the transparent, they normally say is that you can know the originator, the address where the transaction started from, where it ended, maybe the originator and the beneficiary, but in forms of that address. You don't know who, if it is Vincent or whoever. You can know when the transaction took place. You can know the amount. You see all these transactions on the blockchain are publicly available. But the issue is, that is the transparency part of it. But now what do they say? It's pseudonymity or anonymity. It is because that address you see there, unless you have the tool to trace and know who is the originator, the name and the identity, but otherwise, if it is not regulated and you go for the virtual asset service providers to take the KYC of the person, the owner of that address, you will not know that address belongs to who. So now, there is a risk in there because given the cross-border transactions of the virtual assets is very fast, so it's very easy for illegal transaction to take place in that ecosystem. That's how even the money laundering comes in. So it's a risk because it's very fast. The cross-border, you do transaction now, the money has moved very fast. I know there is another side positive of it, but it also has, it's like a coin. One side is positive, another side is negative. So that is one risk. Number two is, I said the anonymity, I said the cross-border, and also it's volatile. You see, there is a speculation in that area where people can be attracted, so the investors get attracted very fast to put in their money. So if, for example, they are working with the scammers and they put in their money, you can understand how much losses the investors could suffer, and many more other risks. So now the opportunities, they're also there. Now, if you check globally and you see how much the section of the global economy the virtual asset has taken, I think today we have close to 2.5 market capitalization of the virtual assets ecosystem. Now, that one tells you how much that portion of economy now globally it is. There's much money in that. If now, let's say the country Rwanda, as we are going to onboard these service providers, it really is a form of attracting investments because the global players are going to come in Rwanda. If they come in Rwanda, they have their money, they use our banks, they have the assets that will be into our financial systems. They give jobs, you see, and tax also. You see, now if a business like that comes in a country, it's really a positive thing to mention. But also, the other side of the coin, of the cross-border, I always give an example today that you have your money on the Momo. You can send it to me here in Rwanda, but you can imagine if you want to send it to somebody who is not in Rwanda. They're using a different network. Let's say somebody is in China and you want to send Momo. it's not going to be easy. We need intermediaries, and it can take one, time, two, cost. So what the virtual assets, the cross-border transfer is, that person who is in China is as if he's here. The way you send money to me when we are together in the same network, it is the same way you send money to somebody who is who is in China, for example. So the interoperability in the blockchain is really easy, and the movement of value is very fast. Two, there is no such a cost like we know when we send money over the traditional financial system. That is two. And three, one of the classes in the virtual asset today Rwanda is going to regulate includes what we call tokenization of real-world asset. What does that mean? It means you have an asset like this building here, and you can make it, you can tokenize it into fractions. I always give an example. Let's say you have a cake. So you have your cake, you can divide into different slices of the cake, and then as opposed to somebody take the whole cake, now these small slices are being taken by different people. Now, if you have an asset like this building and you need to sell it, it may be very difficult to have liquidity at that same time, because having somebody who comes and buy that asset immediately is not easy. But if you have divided into small fractions, it's very easy to raise capital through that. Actually, for people who understand the capital markets, this close to the capital markets product, you know. Again, another opportunity we see is that we said these virtual assets, they do fluctuate and volatile. Some people like volatility and speculation, because at a point they can make that investment. If they buy at a cheaper price and tomorrow it goes up, they make some money because it's a form of investment. I was looking at the Bitcoin today. I think it is on 62,000 USD, one Bitcoin. Yesterday it was 64. The other, I think from now it has declined since January to today. It really went down at least to 10%, because I remember like January it was around 90. So imagine the Bitcoin started at 0.01, I think, value, 0.01 USD, and today it is on 60 something. So you can imagine, though it goes up and down, but somebody who invested in Bitcoin some area, today you can imagine how much they have. So those are kind of opportunities among many others, but still those opportunities are really realized when you have a proper legal framework, so that you minimize all the risks and you maximize the opportunities.
I meant to ask, you gave a figure of, I think, about 3.5 billion, if I'm not mistaken.
2.5.
2.5 billion in value around...
It's trillion, actually.
Trillions, yeah. In value around the virtual assets globally, yeah. Now it got me thinking, do we know already in our projections how much this would bring to our country?
It's quite tricky. You know what, at least on the assessment that we did 2 years back, we really didn't check on the transaction value in Rwanda, but at least we got to know how many Rwandans are involved in the virtual assets. At least we could know that we have like 350 people in Rwanda that are practicing the transaction virtual asset. Maybe what we didn't know is how much value of these people, but those are the statistics we got. But they didn't go deep and say now in Rwanda, maybe we are 0.something% of the global market cap of the virtual assets. We'll be able to know once now the market is well regulated. We know the transaction, we need the value. But today I cannot say now part of the 2.5. Rwanda is the portion of Rwanda is how much, but it's very small, because the transaction in Rwanda are very minimal. Even if you compare, I read on the on that risk assessment, we found that the transactions in Rwanda are not scaling, but it doesn't mean we don't need to put the legal framework because there is that potential of all those risks that I really mentioned.
Yeah, now that we are comparing to the global scale, how does Rwanda's approach compare with regulatory frameworks in other African countries or globally, particularly in terms of compliance with international standards?
Yeah, that's very important. Actually, it gives me now to go back to the journey that Rwanda has taken. I mentioned to you about the international standard that advised the jurisdiction to come up with the legal framework. So I can say at least that our law today that is published is compliant at a very good percentage with the 3 international standard setting bodies. One is the standard for anti-money laundering. We say it is called FATF, Financial Action Task Force. This is the body globally that really provide the standards for countries to comply with some of recommendation as far as mitigating risks with the money laundering. That is one. One of the recommendation, I know they have like 40 recommendation. One of them, recommendation 15, is about new technologies. So if they come to your country to assess you, they check on all the 40 recommendation, but specifically on the virtual asset or even other new technologies, they check on recommendation 15. Are you doing risk assessment? Are you having legal framework? Are you doing supervision? Are you licensing the virtual assets? All those kind of things. They assess you on that. So our law really have taken the consideration of the FATF recommendation. That is one. Two is a standard called IOSCO, International Organization for Securities Commission. That one is the umbrella of all the securities regulators worldwide. So they give standard and recommendation. For also them, they provided some of the recommendation that we benchmarked on. Another third standard is Financial Stability Board. Also, they had good recommendations. We have even more others, World Bank, IMF, but I wanted to mention the 3. So now our law, as we were drafting the provision of this law, we really benchmarked on the recommendation of those 3 international standard setting bodies. On the legal framework globally, we also did a good job in that area. We benchmarked number 1 on the law, they call it model law for the Commonwealth countries. So the Commonwealth advised their members to come up with a legal framework, but they also drafted a model law. So saying that countries under Commonwealth, if you are to come up with a legal framework, this is the model, at least try to customize according to your requirement, domestic requirements, but these are like a blueprint on the recommendation that you can refer to. That is one. 2 was we benchmarked in Europe also. There's a good regulation, they call it MICA regulation. It's market in crypto regulation. It covers the European Union, and they have got, now people are going to benchmark there. So we also took some good provisions that we used into our law. We went in Asia. There is a very good one, a good framework in Dubai, United Emirates of Dubai. They have an organization, it's called VARA, Virtual Asset Regulation Authority. They have made a very good job. They have the good framework, and also we benchmarked there. In Africa, we have also few countries, especially the countries that are complying with some of the standards, especially the FATF standard. They have a good rating. We compared ourselves with Mauritius. Mauritius have a good legal framework. We really benchmarked there. And many other African countries have now in Kenya. Kenya, we benchmarked, and because today they are also, the law is published, but they are working on regulation like us. So we are in the same, we worked parallel, but they were ahead of us. So they consulted us, we consulted them. We have other countries like South Africa, Nigeria, Seychelles. There are quite a number of countries now in Africa that have good legal framework. So briefly, is that we did a good benchmark, international standards, global framework, and in the region, legal framework in our region.
Now that we understand what the risks that go with virtual assets, the opportunities, and how much work went into understanding the market, informing the legal framework. Before I go to the next question, like I promised, where we're going to a little bit talk deep about talk about the filtering of the operators who were there and then the new ones coming in. But before we go there, maybe you'll inform me if I don't know. Does Rwanda as a country have plans to develop its own virtual asset? If I may ask, we know of bitcoins, we know of all those other assets that are out there, but are there plans for us to develop ours?
Yeah, thank you for that. I think there's even a very fundamental introduction. Maybe I could have said it's an opportunity I tell you. First of all is to know what is the virtual asset. Yeah. Number two, what do we consider in Rwanda like the component of virtual assets? I think let's start from there. Now, the virtual assets, as it is defined into our law, the definition we used is not the definition that Rwanda came, maybe it's a definition from the other standard. Actually, it's a definition from the FATF standard. How do they define virtual asset? They say virtual asset is a digital representation of value that can be traded, that can be transferred, and that can be used for payment or investment. There are some keywords there. It's a digital representation of value. It can be used for, it can be traded, like we trade on securities on our capital markets. It can be transferred. I think we talked about the transfer of value. It can be used as a means of payment, meaning that some jurisdiction you can use virtual asset to buy something.
Yeah, it can be a legal tender.
Today, I think one country,
for now in Rwanda, I know in the law it's provided
I
that
will reach
it's not.
there. Now, it can also be used as a means for investment. For investment, I mean you can go and buy a virtual asset and hold it for a while, waiting that the value can go up. You remember the other nature of volatility. That's where investment comes. Now you can invest and make profit or lose. And those are the concepts of investment. So that is the definition of virtual asset. In Rwanda, we have considered 3 categories of virtual assets. One, we called that the unbacked virtual asset. Another category is stable coin. Another category is we call the process of tokenization of real world assets. I also spoke about it earlier. It's like a token representing the real world assets, right? Now, today globally, I think we have like 8,000 types of virtual assets. Let me start by the first category, the unbacked virtual assets. This is the big category worldwide. The 8,000 I'm telling you, I think it can take more than 7,000, and there are many, the biggest parts. Now, these are now the virtual assets that are not backed. They don't have what we call intrinsic value, starting from the Bitcoin. If I say intrinsic value is the value of an asset before the asset even goes to the market. It's like original value of that asset. I always say, tell people an example, give an example that like a building like this, it has an intrinsic value, even if you don't sell it, but you can use it for a meeting like this one. if you have rice or whatever, even if you don't sell the rice to the market, you can eat it. So that's something that has intrinsic value, the inner value of itself. Now the virtual assets, the first category I'm telling you, they don't have intrinsic value. Where do they get value? Because in the definition we said it's a digital representation of value. Now where do they get value then if they don't have intrinsic value? They get value from the sentiments or the community. I'll give you an example. During the Trump, when he was creating his Trump coin, it's not saying that it has value, but because the other time, how do people value him? How people like him? So it has got value because of the sentiments people have expressed.
So it also goes along with credibility of where it's coming from.
Yes, where it's coming from. If Vincent today, you wake up in the morning, you say, now I'm going to create a token.
No one is going to trust me.
No, they can trust you. Why not? But now they compare the way they trust you maybe with Trump. So they give value according to how people have got the significance. So it's how people have treated that. And the value, they get value from there. And even the supply and the demand, you see, they don't have intrinsic value. Those are, we call the unbacked virtual assets. And there are many today. So that's category number one. Category number two is the stable coin. A stable coin is a stable, it has an underlying asset, it has a reserve assets. The example we have today, we have the USDT, USDC, and many more others. So their reserve assets is USD, United States dollar, which is one stable coin equals to $1. This is the second category. The third category.
Before we go to the third category, does Rwanda's incoming digital currency now fall into this?
I'm going to, let me reach there.
Okay,
let me first finish the three. So the third category, which I said, these are tokens, but representing the real world asset. I give you an example like the building, the real estate, and whatever. And these ones are quite similar to our capital markets products like shares and securities. So those are how we categorize the virtual asset in our law. And we are going to allow all of the three in Rwanda. So allowing them, it means we are going to be so much, we are going to take care of the first category and backed one. So you come with one of, let's say you are coming with the Ethereum. Before you list it to the virtual asset exchange, we'll go through that Ethereum to see the characteristics. Is it worthy for Rwanda? Is it, if we agree that is okay, it is legit, we allow you to list it on a virtual asset exchange. If we don't see value, we don't allow it. So
does that mean if Vincent was to introduce his own, he would just come to you, you analyze it against your Vincent, requirements?
Yes.
And okay.
This token of Vincent is called Vincent X, for example.
Yeah.
So Vincent X is a token. Now there are a number of questions we ask when we want to list the Vincent X on the exchange. We want to know if it is, now you are coming, whether it is, this time it's going to be unbacked. If Vincent X is a token that is not unbacked like Bitcoin, we ask who is the issuer. Issuer means now Vincent, the owner. Is it a company? We check who is Vincent Limited, for example. Now we check everything. We have a list. They are going to come into the regulation, but at least we know what will be there. We check now on the Vincent X, that coin, the characteristics. How much community, sometimes you ask the numbers of people who have shown interest in the Vincent X before. If Bitcoin today has got, I don't know how many, that is a plus, because already some people have got trust in that one. It's also one of the considerations we consider. The number of the community using that that token of Vicent X, and many more other requirements. We see how the rights of the investors, how we are going to treat investors, how are they going to benefit. There are a number of requirements already. We are developing those ones, but to tell you that whatever coin, whatever virtual assets to be listed in Rwanda will go through that process. Yeah, all the three categories, whether unbacked, whether backed, whether representing an reward assets, it will have to go. Now, back now to the question that Rwanda, you said Rwanda would...
Would we have our own token, if I may say?
Now, if you understand the characteristic of the coin, you can't say Rwanda is coming up with his, or like Rwanda, the country.
As a country.
These are private things. Either the company comes with a stable coin. Say the stable coin is backed by Rwandan francs, for example. We are waiting, but I don't see it very soon to say now an asset is a stable coin is going to be backed by Rwandan francs, because today we have the CBDC. CBDC would work similar to that stable coin because CBDC is equivalent to our currency. So having a stable coin, it will have the same characteristics like CBDC. So I don't see value added. But if you come and say my CBDC is backed by USD, for example, or other assets, because sometimes you allow a stable coin to be backed by a number of assets, not a single, can be 2, 3, and you give the percentage. So a stable coin can be backed by 2 to 3 reserve assets. Whether one asset could be fiat currency, another could be maybe government bonds, another could be, so a pool of assets can be used to back the stable coin. To tell you now that Rwanda, you can't say Rwanda is coming up with his own digital, no. If maybe a Rwandan or a Rwandan company can come up with a stable coin, can come up with an asset like this building with now the tokens representing such asset. He can come up with unbacked virtual assets as an individual, because these are private, not like a state-owned asset.
Now that we have talked about what are the virtual assets allowed in the country, the regulations and everything, now what happens to individuals or companies that have been offering these crypto-related services informally? How will the transition be regulated? How will it look like?
Yeah, very interesting. What I would say first of all is that we have been warning people since then that virtual asset business is people to wait until you have the legal framework. Especially we are warning the citizen that be careful. This business risky. So wait, we are not sitting here, we are doing something to come up with the legal framework. But on the other side, now we are telling the virtual asset service providers, please wait until we have the legal framework. What you are doing is not supported by any legal instrument. Now that you have the law published, the law also has got some penalties. If you do an offense, there's a penalty there. So you are asking, what about the companies that have been doing this?
Informally.
Informally. My assumption would be that they are not there. Let me put in quotes. They are not there because already Rwanda has been saying, don't do this. But let's assume now these people, they are there, they refused to obey, and they continue to do that. Still, would advise them to really don't do that until you have all the regulations in place. Ideally, we would say that since the law says if you are doing this one without having a license, you're committing an offense. But since now we don't have the regulations to license them, they could say, now we are ready to do that, please give me the license. Now, if today we don't have license, on the other hand, he's right. But this doesn't tell him go continue and do it, and we don't without having a license. So what I would say that we are working very fast to come up with the regulations, but once the regulations are in place, these people will be required to immediately apply for the license so that they do their business when they are really safe. And there is an advantage of doing something when you do it under the legal framework without doing it outside the legal framework, because there are a lot of consequences. Yeah, briefly, I think that's what I could say.
I mean, there is that based on assumptions, yeah, but let's hope those who we are assuming are there will now start the legal process of, working formally. Now, let's talk about the eligibility of businesses or companies that will be allowed to provide these services. Yeah. So, what types of businesses that will be eligible to apply for virtual asset licenses, and what are some of the key requirements they should expect?
Okay, that one is very important. Maybe let me come back to our law. I said the law recognizes 3 types of virtual assets.
Yes.
That's very important people to understand. One more point, very also important people to understand, is that our law is divided into two parts, main parts. One is about the virtual asset service providers. That is the common term people know. And sometimes people say the law on virtual asset service providers or the law governing virtual asset service providers. But for us, we said it's a law regulating virtual asset business. Actually, we went beyond virtual asset service providers. And this leads me to tell you on the second part of the law. The second part is the issuers of the virtual assets. We don't consider issuers as the virtual asset service providers. So now you understand we have 2 categories. We have the virtual asset service providers and we have issuers of virtual assets. The issuers, as an example for our capital markets, today we have Burarirwa is an issuer.
For the capital market?
Yeah, it's just an illustration for people to understand. Burarirwa is an issuer, MTN is an issuer, and many more other companies listed on our market. But we also have the brokers. So the brokers, fund managers, these are the service providers. And the 2 companies I've just said they are issuers. Now let's take that example into now the virtual asset ecosystem. In the virtual asset ecosystem, let's start by issuers. The issuers are those people who are coming with the virtual assets. You want to issue and back to virtual assets. Remember the other 3 categories? You want to issue the stablecoin. You want to issue the tokens representing real world assets. You are an issuer, and there are requirements for you. Now, after you issue, you need people. You need where that virtual asset is going to be listed on an exchange. So that exchange is a service provider, because that's where people are going to be trading the virtual assets. They are going to use them to do transfer and whatever. Now let me come back to the question you asked the businesses. Apart from the issuers, the virtual asset service providers, you have a number of categories also. We can say virtual asset exchange, where we do trading of the virtual assets. We can say custodians. The custodians, these are the ones that will be custody of all these virtual assets, like safekeeping of the virtual assets, the wallets and everything. Number 3 are brokers, the facilitating of the orders and everything. Number 4 would be, we call them the on-ramp and off-ramps. So these are the ones that facilitate the exchange of fiat currency into the fiat currency into the virtual asset and vice versa, and also from the virtual asset to another virtual asset. There are also a number of other categories into the virtual asset service providers, but since we are working into the regulation, that's where we are going to put all the risk into the regulations, the requirement for exchange would be different for the requirement of a custodian. The requirement for custodian would be different from the requirements for a broker, and so forth and so on. This was just to give you a brief on the virtual asset service providers and the issuers.
Yeah. Now, to me, it sounds like it's going to give quite a number of people or companies opportunities to get into that business, which leads me to the question which I think now demands some clarity on what key opportunities does the law create for banks, fintechs, and payment service providers, and what role do you see traditional financial institutions playing in this ecosystem?
You see, let me, as you said, the ecosystem. Now we have two ecosystems. One ecosystem is the traditional ecosystem of financial sector, of banking sector, insurance, capital markets. That is one ecosystem. A new ecosystem is the virtual asset ecosystem, where we have all those issuers and you have all those virtual asset service providers. So these two ecosystems are going to be linked. That's where now there is, we need to be careful, because that's where the banks are going to realize the opportunities. Because let me start with banks. You said what are the opportunities for banks or other financial institutions? If a virtual asset service providers come in Rwanda, number one is going to open an account in a bank or in banks. What that means, if you open an account, you put in some money there. So there are banking services already. The bank will start benefiting from the virtual asset service providers because they will be providing bank services. That is one. Now, remember, these are going to be also big companies. They are coming with their assets, and these assets will be into the bank. Two, we said we have the category of custodian. Now, for the custody, there are two types of custodian. There's a custodian who do safekeeping of the virtual assets. That one is still under the virtual asset ecosystem. But there are other custodian who is going to do the custody of the reserve assets. I did say that stablecoin need to have the reserve assets. The reserve assets could be Rwandan francs or securities or any other currency. So you see, now it's an opportunity for a bank who is positioned very well to be a custodian of those kind of assets. We have the other financial institution, especially in the payment ecosystem, where all these payments. So if you want to do payments, whatever services you want, definitely even investment, any investment require payments. And the payments, we use the existing financial payment service providers in our traditional finance. So you see, there are quite a number of business activities that are going to interlink between the two ecosystems. And I see our banks, our payment service providers, our fintech are going to benefit from this new ecosystem that are coming. Maybe we need to be careful by having a very proper framework to know how our financial system is going to be interacting with this new ecosystem, so that we minimize all the risks or conflicts or whatever. So we have a very good market that is really transparent, and we realize opportunities more than we can create more other risks.
You finished on a point I wanted to go to directly. So when we talk about digital transaction, when we talk about like you mentioned, virtual assets, it comes with a lot of sensitivity when it comes to the security. Yeah? So which leads me to the question of, given the borderless and digital nature of virtual assets, how will the capital market and BNR, since you are the partners working on this one,
yes.
How will you two monitor and supervise licensed operators to ensure compliance and protect consumers?
Yeah, this should have been the first question because it's really key. Yeah, as I said, I think in my introduction, I said for us in the capital markets, our mandate is, one of our mandates is investor protection. So it's very important. The central bank, one of their mandate is the financial stability and also consumer. Remember to distinguish between consumer and investor, because investor is somebody who invests expecting return, but a consumer just buy financial service, consumes without expecting the return. Now, you are asking a very good question about the investor protection or consumer protection. We didn't go through the law, but if you check on the purpose of the law, you will find like 5 reasons why Rwanda came up with this legal framework. One of them is to ensure consumer and investor protection. How, practically? I think I can put it into some few categories or areas. Number one, to protect investor and consumers is through licensing. So we do allow only the company that has fulfilled all the requirements. And that is the gate, because that's the cleaning actually. Now we are starting cleaning. The scammers, the Ponzi scheme, the pyramid schemes, they cannot come with us having those business models that are fake, and they cannot come for us. Now, if we find you doing that, it's an offense. So it's an area which is very important, licensing of the virtual asset service providers. It's a gate, it's a pillar. It's something we start with so that we have legitimate business in Rwanda after going through all this formal licensing. That is one. Two, if you are licensed, there is an ongoing supervision where we check the reports. How do you support the investors? How do you comply with the regulation that you have? So it's an ongoing activity. We supervise them, we see if they really comply with the legal framework. There's a very good point you said about the cross-border. Now you say, how are we now going to supervise these cross-border transactions? I think there are 2 ways. One is the law gives us an opportunity for collaboration and exchange of information between us and domestic competent authorities and foreign also regulators, where we exchange information. For example, if there is a transaction that is suspected from whichever country, we can really request the information about the origination of that transaction. But also something very, very important here is that there are tools now, technological tools that can trace the transactions. So where the transaction is coming from and where it is going, and you check if they are suspicious in that transaction. So you can flag it, you can freeze it, you can. So I think briefly, it's a beginning. All the requirements are going to put into the regulation. Maybe to tell you that today we are actually in the process of drafting the regulations. We only have the law, but now the law has given us the kickoff process of drafting the regulation. So those are the requirements we will put into the regulations. And through licensing, through supervision, through even offenses and I mean penalties for the offenses, we really think that these are some good measures to protect investors. Now for the cross-border, there are these tools where you can track the transactions and you can flag if there is a transaction which is suspicious, and also the exchange of information with the global or peer regulators in the region where the transaction is coming from, or is the destination of the transaction.
I believe one of the ways to attract international investors is to have stable and trusted legal frameworks, which is what this one is doing. But that one aside, how could the framework help attract international virtual asset and blockchain companies to establish operation here in Rwanda? And are there any incentives planned for approved operators?
Incentives. Okay, there's something maybe very important I can mention here. Having a very good legal framework is in itself a very important factor to attract those companies.
Definitely.
Now, we don't see maybe that we need more like short-term incentives for attracting companies to come, but having a very good framework like we are designing it. I told you how our framework is very good, given the benchmarks, the standards, the global legal framework. We trust our law is very balanced and really good enough for people to attract companies to come. So to me, that one is enough for attracting people to come, the big company to come, the blockchain or whatever. If you have a very good framework, it really attracts you will see them, they will come. No short-term incentives, they will come, because we are planning to have a very good framework to really attract whoever wishes to come and do the business in Rwanda.
Since, like you said, the framework targets establishing stable grounds for anyone to come and join the ecosystem. Now, in 5 years from now, what would success look like for Rwanda's virtual assets sector? And what impact do you hope it will have on the country's digital economy and investment landscape?
I think it's it's a good question. It's like the vision that we have for virtual assets. And indeed you have that vision, because as I said, for now, some years back, I've been thinking on how we come up with the legal framework for virtual assets. Now, a very good milestone, we achieved it to have the law here. Now, you ask me, what do we have in the next 5 years?
What does success look like for you?
So most of people would say success look like when I have 50 companies registered in Rwanda. That is really a huge success, whether 50, 10 or whatever. But to me, the success is beyond that. The success is how investors have got trust in this market. The success is how consumer and investors are protected. The success is how compliant the ecosystem is. If now the companies are really compliant on the legal framework, people have got trust in that business. We no longer have scammers in Rwanda. We don't have Ponzi and pyramid schemes. The market has integrity, which is one of our mission, because we say we want to have the integrity in the market, where there is no market manipulation, where there is no, we have cleaned all the cleanup. Now the market is good, where now the market itself, it attracts now these companies. So when the environment is very good, when there is no complaints for investors and consumers, when we see companies now are coming, whether 1, 2, 3, 50, I don't know, that's the success anyone would like to see in the whatever years to come. Because that's really a success. You have a very good market. The Rwanda now, we know Rwanda aspires to be an international financial center. And why people would trust Rwanda is because of the environment that is conducive for the business. So people are making money, they're making profit, especially the investors. The business are thriving in the country. Yeah, I think that's what we aspire to see this market, like any other market, like financial banking today is doing very well. Capital markets is doing very well. Now the virtual assets, I think we have to forget what information all these scammers and cases we know. So the market is really stable and people are doing the business as it should be.
Maybe this is going to be my one last question. Okay, yeah, close to the last one. How do you see local players? How ready would you say they are into fully harnessing this market we are regulating for them? How ready do you think they are?
The local players?
The local players.
I think everyone is excited. What I see, comments, maybe people willing to understand more about this, they are really excited. And we're also excited as well because, as we said, like that vision of having a very good market, it's a wish for government and whatever. So I think local players are excited. Now that we are drafting the regulations, we are going to put the requirements. The requirements are going to be balanced. Remember, our main focus is to protect investors and consumers. Our main focus is to keep the integrity of our market. The focus is to eliminate the illicit transactions so that we comply with the standards, especially for money laundering. We want the markets people to make business. We want also to promote innovation. You see, there is efficiency once such innovations are coming. Maybe some of the things I didn't mention, we have a fintech strategy today in Rwanda that promote the innovation. So whatever technology like this blockchain that is coming, AI, all these innovations that are coming, we are supporting them. But we add something that responsible innovation. It's not innovation that come to bring the risks. The innovation that is responsible, that comes and really realize the efficiency, convenience, and everything. So I think our local players are ready. Once the requirements are set, they will need to find ways to comply with the requirements, and also we'll be here ready to support them to go together into this journey.
This is the last question. Do we have a timeline for when the regulations are coming out?
Very good one, but I think we have made, we're coming from very far, and we have even reached very far. We are just remaining with a short journey for the regulations. We just talked on how far we have come from and where we are today. Really having a role here published is something huge for the Rwanda to say that we did a good job. Now, what is remaining in the regulation? We have started drafting the regulations. It has also some process. We even engage you journalists to come and give comments to the regulation. And the public, it is our practice actually. After we have like draft number 1 or the first draft, we issue it to the public to get comments. We collect comments. We incorporate the comments, and then we even find time for validation. We call on the key stakeholders, and after that, now we're going through the approval process. I can't say it's 1 month, 2 months. Sometimes there are different factors, but I would say it's very soon. That's the keyword I would use here. It's very soon, and everyone is looking for that here. Everyone is working towards having the regulation in place so that we even reduce all these questions, because you're not the first person to ask me when the regulation will be in place.
I think very soon is quite promising.
Yeah.
We can keep calling and ask, how far is your very soon? Huh?
We'll be able to answer.
Yeah, now as we are closing up, what would be your parting message as you are wrapping up this?
Yeah, thank you. I first of all thank you for the time we've spent together, but now to our viewers, to say I have a message for 2 people. One is the investors or consumers. I want to tell them the message that the government, the central bank, the capital markets has been delivering is still the same. We tell you not to engage into this business. Don't be excited that the law is there. Yes, the law is there, but we're waiting for the regulation. 2, it's a message for so-called virtual asset service providers, or these people that have been operating this or giving these services. We still urge them to really wait until the regulations are here, so that they come and apply and comply with all the requirements. But to me, I see the journey is exciting, and since we are trying to have a very good framework to support the market, to support the virtual asset ecosystem, to comply with the standard, and to have the market that is very clean, free of Ponzi, free of scams, free, and a good market like any other markets, protecting investors, protecting consumers, without having spillover to our financial system to cause systemic risks. You see all those risks that we see into all people perceive into the virtual assets. We want to clean them and have a very good market. Yeah.
Thank you so much for your time. I appreciate it.
Thank you.
At least after now, I'd say I understand a little bit about virtual assets.
Yeah, feel free again to come and have a more other discussion so people could understand more.
Thank you so much.
Okay.